Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is NFP Live. Today, we're going to be covering the jobs numbers from February. This is probably one of the bigger releases we've seen in a while because we're going to get a full month of jobs data according to the new Trump administration policies. Tons of government layoffs, lots of deportations. We don't know what we're going to get through from this sling of numbers. So I'm going to run through a few of the fundamentals very briefly first, and we also are going to talk about a few key levels and really what the game is all about right now. The game is the DXY. The dollar is getting absolutely pounded this month. We're going to go through. Right now we're trading 103.72 on the DXY, so I'm going to go through that, what that means, and then we're just going to do a brief primer on what NFP means, and then we're going to trade this thing. We're going to lock and load the 5813. We're going to trade that on a 1 minute chart. We're also going to trade the 920 on a 1 minute chart as well. And we're going to be looking at gold, everyone's favorite. We're going to be looking at gold. We're going to be looking at the Euro USD. I've got a key level for the dollar yen. And then also we're going to be looking maybe towards a US index. I don't know that we're going to trade the NASDAQ right this second, but we may trade the E-mini S&P 500 futures, the world's biggest futures contract. So welcome everybody back. JC, good to see you. Always a pleasure. Emmanuel, good to see you. Manjo, good to see you. Or Manoj, good to see you. All right, guys, let's go ahead and get started here. I want to just get started. If you need to trade, if you need a place to trade NFP in the future, check out Switch Markets. They've got you covered. Bring your ambition into focus. Trade thousands of global markets. Fast and simple funding. 0% commission accounts, and they've got everything you need to get started. Okay, this is the game this month. No question about it. We're sitting here March 7th. We're about a week into March. And we've seen an epic shift in the U.S. dollar. Now, I was bullish the U.S. dollar, but as you can see on this monthly chart, you sort of got a doji there, a bit of a sell-off here, and there's the big correction, and there's the big plunge. This area right around 104, this 103.94 and 104 is absolutely huge, guys. If this gives way, you're going to 102, and quite frankly, if we go to 102, we're not going to bounce. We're going to keep on going down. Why did this happen? We covered it yesterday. We covered the potential abolition of the Federal Reserve. That is why the U.S. dollar right now is sort of under correction. We don't know what's going to happen with monetary policy. I'm fascinated to see what happens on today's jobs numbers. So the next thing we want to cover is a key level in the dollar yen. If, in fact, we don't get elected here, this is probably going to be a trade idea for later today. But I want to go ahead show a lot of you when I put these trade ideas out what I have in mind. Very, very simple. I'm identifying my macro level right here. Dollar yen daily chart, 148.34 is going to be my resistance zone. That's the area where I'm going to make a play and see if we can't get paid off right there. So right here, 147.71 is where we're trading. We're only about 60 points off of that, 60 pips. I'm going to be looking to take that trade potentially. Remember, these are demo dollars. We will get back to the real money trading soon, I promise. But we had a bit of I won't get into it right now, but we had a bit of an issue with that. In any case, right there, I'm going to go look to sell. Let's make it worth our while. Let's do something like this. Now, I'm actually going to assign a take profit and a stop loss to this trade. I don't typically do that if I'm trading it live, and I can actually do it, but very, very quickly and focus on it. I'll be able to manage it by just watching. But right here, we're going to go ahead and we're going to dial this thing in. We're going to enter the market at about 148.29-ish, and I'm going to go ahead and lay. Let's just go ahead and lay, 50 pips. That'll put us in the ball game. And then my stop loss is also going to be 50 pips. Now, if we do get elected, I'm going to manage this one on the fly to sort of show you exactly what I'm looking at here. Where do we want to sell at? I want to be at 148.29. 148.29. Now, that's a sell limit order. That's going to stay in the market until we are elected. I've got my stop loss. I've got my take profit, a 1-to-1. That's just how I do business. Most folks do 1-to-2s, 1-to-3s. Okay, so that's going to be our trade if, in fact, we do get elected. And believe me, we have a chance here. We're shooting for, about $350. That's a doable trade on even a relatively small account. So we're going to go ahead and tee that one up here in a second. Mark Corp, good to see you, Mark. All right, guys, that's going to be the first trade idea. Last thing I want to cover, and then let's get into it. This right here was sort of our pet rock. It didn't do much, this 920 crossover strategy right here. We took this long a few days ago just to see exactly what a swing trade in gold would look like on a 4-hour time frame. And you can see right now we were up a little bit earlier today, and now we're just sort of coming off. This shouldn't surprise anybody. This market is flat right now, and if you do carry this thing into the economic release, you're taking a huge risk. So remember, these are demo dollars. If this was live money for me personally, I'd scratch it. I would scratch it. I wouldn't even mess around with this NFP release because the market can go absolutely crazy. But for right this second, I'm going to go ahead and leave my stop loss somewhere down around 28.84, and I'm not going to put an order in. We're just going to watch it and see how this plays out. Personally, if I know where my stop loss is, I've got a chance to let this run, but I can't stress enough. If you do things like this, it's dangerous. It's really dangerous because of what? Slippage. Just because, let's say I have a stop loss down there at 28.85 doesn't mean I'm going to get that, especially when the markets go crazy. We'll go ahead and let that spin. We were in positive territory a little while ago, but it looks to me like this one's going to get nailed. Let's just wait and see what NFP says. All right, let's get a quick crash course and a primer on U.S. non-farm payrolls. If you haven't ever seen it before, I know we always get a lot of new folks watching these things when we do something like an NFP Live. Right there, you can see that this is the biggest employment number in the United States. This is just a fancy way of saying we're counting jobs, how many people are working versus how many people aren't. NFP, remember, projections are key. Previous releases are key. We judge everything on a relative basis. It's all about where the number hits according to what we think is going to happen and what has happened in the past. Now, how does it impact the Forex? If NFP comes in above expectations, that's going to be bullish for the USD. That's going to kick the USD up. If it comes in below, that's going to be bearish. That suggests that we may need rate cuts to stimulate the economy. As far as NFP with equities and commodities, if it's above expectations, that's bearish. That means that, okay, we can raise interest rates or we can hold interest rates tight or we can tighten rates. That typically puts a damper on your growth, on your participation in equities and commodities. So that's what I would be looking at there. Now, as far as what we can expect for today, NFP previous 143, we're looking for 159. So we're actually looking for growth. This surprises me. I don't think we're going to beat that number. I really don't. But remember, it's an absolute crapshoot. Nobody knows what's on that page except the folks that wrote it, and that's That's going to be a long talk after we talk revisions here in a minute. Unemployment rate is supposed to stay static at 4%. Now, what does all this mean? Not much. Historical levels, you can see financial crisis of 2008 to 12. I was there. That was very ugly. That was a very ugly thing right there. And then COVID, of course, most of us were here for COVID. We were all here for COVID probably. And what you got there was just an epic shift. The revisions are absolutely key, and we're going to cover those after the number comes out. This is, to me, the biggest deal. The biggest deal in the whole game is going to be your revisions. Remember, last report, we revised those up for November, December. I called shenanigans all over that. We're playing politics now. I got a feeling you're going to see some more big revisions. Don't be surprised if we revise them up again for January and we start revising them down the rest of the year. Remember, 2024, we revised these numbers down. What I'm trying to say is this: the number that we see today isn't exactly the number. So we're going to go ahead. We're going to take it in. We'll cover it as it happens. As soon as you guys see it, you're going to see it a lot sooner than me. You got to just get in there and make sure that you put it in the live chat, either on YouTube or in the chat room here at How to Trade, and I'll be sure to bark it out. This gold trade's dangerous. We're going to let it roll. A couple things that I want to cover, though. Euro USD, this is a 1-minute chart, and this is our 920 coded. This is our 920 coded EMA strategy crossover. We're going to get a trade more than likely. We're going to get a trade. So remember, we're waiting right now really for price to get up out of bounds is what I would call it. We want to see a price really jump up above 70 on that RSI to look to sell it, or below 30 to look to buy it, and we just do that with the crossovers, and we'll show you how to do that exactly when it's warranted, when we need to do it. Now, as far as we also want to look at gold, we're going to look at gold right here on this 5813 on this 1-minute chart and see exactly what we need to do. You guys, a lot of folks really like the 5813. It's a pretty darn good strategy. It's growing on me. At first I was like, no way. It's pretty good. If you know when to trade the 5813 and what time frame, you've got a shot to make it go. Okay, we've got about a minute left. What we're looking for here is we're looking for the 5 to cross the 8 and price to close pretty much above all three. The 13 is absolutely huge. I'm probably going to make a video just on the 13 because that is my favorite EMA, and I think you could probably just trade the 13 as support or resistance and be pretty darn good at it. But we'll put that in the YouTube channel probably down the line somewhere. So right now we're watching gold. We're watching the Euro USD. Just for the sake of argument, let's go back to this 920 here. Let's go ahead and take a look at a U.S. index. Let's go with an NC E-mini S&P 500, the world's largest futures contract. I would never look at this on a 4-hour chart. Never, never, never. I use a 30-minute during the U.S. session to trade the E-mini S&P. But let's take it right down. I mean, let's get right down to business here and see what we've got. That's a 1-minute chart. Let's take this thing way down. Let's take it down to let's take it down to say a 15-second chart. Now remember, we got a video coming out Tuesday when not to do this, when not to trade crossovers. If in fact you're going to do something like a 15-second chart. All right there's the number. Bang. Okay, it dropped. If you guys see it, let me know what it is. That right there is the kind of volatility that we're talking about. That's a major break right there out of the E-mini S&P 500. Initial bullish break. What do we have on gold? Okay, gold broke positive for us, and now we've got that crossover really developing here on the 1-minute chart. So I'm going to go ahead and close out of our other position because I want to go ahead and place this trade. Now, this could be tough stuff now. This is a 1-minute chart. We've got a big move on gold. You can see what's happening. We've got the 5 crossing over the 8, and we're getting prepared potentially to buy this market. Now, price has to close above that 13, and what we're going to do here is we're going to be looking to potentially take a buy. We're just going to buy it at market. We're not going to put a take profit on it, and I'm going to show you how to build one of these trades in real time. So I want a market order right here. We got to go ahead and close that out if possible. Fail. Okay, if they finally closed it, we finally got to fill. Okay, right here, market. That's going to be your trade. Let's go ahead and buy it. Okay, we just sent them long. Let's see if we do, in fact, get filled. This platform's lag. Okay, right there. We got filled. Now, is this highly dangerous? Hell yes, it is. Why? Because the market is just digesting that NFP number. We don't know what's going to happen. All we have is a technical setup right there. We've got a crossover. We've got our 5. We've got our cross. All of our parameters have been met. So essentially, we're playing for a bullish break. Now, are we going to get it? You can see that we're getting absolutely destroyed here. Price is pulled way back in our face. We bought 18s. Now we're trading 14s. It doesn't look good. It doesn't look good. But what do we have? Well, we've got a stop out point. We know exactly where we have to get out. We're trading a 1 minute chart. Shouldn't really shock anybody. I'm going right beneath that swing low with my stop out point. It looks to me like we're going to get gobbled up. Once again, demo dollars. We're just doing this for the sake of argument. Highly, highly risky trade, guys. We're talking about 1 minute after the NFP number, after essentially a big bomb was dropped on the market. You got to really watch yourself because you can easily get chopped up, and that's what's happening here. We'll see if we do get a little bit of bullish participation and maybe fill back in. But in my view, this is probably going to go down as a loser. But now you're making a comeback, so that right there, there's your crossover. There's your crossover. Now you actually crossed back over it. This is really just a nightmare scenario for crossover trading. But we've got a stop out point. If you're assigning your leverage, I'm going to give you a maximum of 5% of your account. If you're a real hero, you can put 7 down. But right now we're just sort of mulling around 29.14. Haven't really done anything. Bearish pressure, yeah. We're beneath the moving averages. It looks like we're going to get axed here. I mean, it's coming down. It's coming our way here, and it looks like we're going to get stopped. So if, in fact, you are going to trade this way, understand that it is risky. We're not dead yet, but we're getting there. Let me see. Hemo, good to see you. Calvin, 151,000. So 151,000, did we, in fact, hit our expectations? And the answer is no, we didn't. And that shouldn't surprise anybody. What I'm interested in reading it, we're going to read the report here in just a second, but when we in fact do go through this report and sort of look at the adjustments, I'm interested. I want to see exactly what happened. 151, hey, thank you, Jay Holden. And you can see right here, this is one reason why you stick to the strategy. Stops down, leverage in check, and you just go for it. That's all there is to it. If you're going to trade crossovers, you just go for it. That's the way it is. 1 minute, very, very risky, but we're making a comeback. Don't call it a comeback. I've been here for years. All right here. This is the trade that I really wanted, and we didn't get any love at all. As a matter of fact, this trade's going to come off a little bit. This market, the dollar-yen, is going to come off a little bit, and this we're not going to get elected. So that's unfortunate. Would have loved to have got a bullish bounce there and give us an opportunity really just to crush it. U.S. dollar index. What's happened to the dollar index, guys? This is bad news. If you're holding dollars and you're long, this situation right here tells us all we need to know. You've got a big monthly range right here, spike low, spike high. You're coming off. Now what's going to happen? I can tell you right now that if 62% gives way, if this zone, if they don't see bidders very, very soon, you're gonna come way off. You're not just going to come a little bit off. You're going to come a lot bit off, and that's going to be an interesting dynamic for dollar traders. Calvin, nice LL Cool J. Yeah, don't call it a comeback. I've been here for years. In any case, we're going to come off in a big, big way. MDRK, thank you. Absolutely. Let's go to the Euro USD. What's going on right now? Okay, you can see our coding is working fairly well. Now, right here, you would have been in overbought territory, and you would have sold right down there and got absolutely destroyed. That's why I highly recommend letting a few minutes go by before you actually trade this thing. But what do we have now? Yeah, we don't really have any way in. We'd still be looking probably to get at least up here. This right here, overbought, bang, you would have sold right there. You would have got X'd out, something like that, or that would have been your sell down here. You'd have got knocked out. The beauty of it is it's only a 1 minute chart, so we'd have got stopped out at 80, and our sell would have been right down there at what? It can't be right. Yeah, it is. So that would have been a big loss, and that's what happens with news. I mean, it's crazy. News is crazy. In any case, right there, we're headed up. Did we have a chance? I mean, if we weren't doing this right here with our confirmation, turn RSI off, you're right there, bang, you're short, you're going to get stopped out, and you're probably long again. Right there. There's our coded candle. Our gold candle tells us when to get long. So you went long right there. 1 minute crossover trading. I know a lot of you really love that stuff. I can tell you right now, I'm not real big on it. Let's get back to our gold trade. Hey, look at that. Look at that. Not too bad, huh? Right back up into positive territory. Do we get the gold runner that we think we're going to get? I'll tell you what, as long as the dollar index is falling and the USD's falling, gold's going to rise. Gold's going to rise. So that's going to be a big deal. MDRK, $109. Wow. Alex, buy. Well, we'll see what happens. As far as how's our E-mini doing? E-mini 15-second chart. Yeah, we missed it because I was talking about, I was doing LL Cool J lyrics, but it's a 15-second chart. Listen, guys, there's a difference between trading and being a gambling junkie. Now, I know a lot of traders that are gambling junkies. I gamble. I'm not a junkie, though. I can tell you that. I know exactly when to quit, and I know which games I can win. As you get older and you're in this game for a long time, you understand that you play games you can win, and it'll be funny. That mantra will trickle into other areas of your life. And I only play games I can win. If I feel like I can't win a game, I won't play it. Here's your 920, 15-second chart. E-mini S&P 500. Where are you right there? Overbought territory. Overbought. There's your sell. There would have been your sell right there. Price is blowing up in your face. Stop loss is going to be up here somewhere. I'd probably put it right above that. Will this work? I don't know. Looks pretty tough to me. Short time frames. A lot of compression here. Compression. The market really rotated back up against you. But are you dead yet? You're not dead yet. But I will say that a weaker dollar typically is going to lead to stocks that are going to rally. And right now we're already seeing a little bit of bullish price action creep into stocks. So if you're a 15-second trader, remember you're going to be taking trades all day long. And the biggest thing for you is to dial in your risk. If you're trading 15-second, 1% to 3%, and you have to keep pulling the trigger all the way. You have to keep pulling the trigger all day long, or else your winners won't outweigh your losers. This one right here, I mean, really, we could send them short. I mean, that's pretty much what we're supposed to do here. If we're using RSI confirmation, sell it. You want to sell it? All right, let's go ahead and sell one. That's one lot, very conservative. But something like this, that would have been your trade. Overbought territory. That's behind my picture, sorry. Overbought territory, cross under. Now, even though you crossed back over, you could have exited right there, or you could have held the trade. I'm a big fan of just holding them. Build the trade and hold it. What do I think is going to happen here? If I was taking this trade, I'd say, okay, listen, we've got to at least shoot for market structure. I'd be looking for this little order block down here, sort of pre-NFP levels, and we'll see if we get there. Personally, I think it's a rough trade, even though we're up about $160 or $162.50 right now on one lot. I would be very, very careful doing stuff like this, especially after NFP. You could really get whacked, and not just a little bit, but a lot of bit. Be very careful right now, guys. These markets have been unbelievably difficult this week. I don't want to see anybody losing money, just running in there trying to make a fortune. Be conservative. Be smart with what you're doing. In any case, right there, you can see just how fast I can blow up in your face. Any private messages, I will get back to you right after the live stream. Something like this, though, this is a high-risk trade, and it's already going against you. I don't know what's going to happen. My guess is you're going to get this big move, something like this, which is your NFP number, and it will not shock me at all if we trade inside of that for quite some time. So if you wanted to build a short, like we built with this crossover, you can do it. Just got to know when to hold them and when to fold them. If I broke out of that NFP range, I'd be out. Let's see. Look at right here. I mean, we're just on fire today. It's going our way again. 425, 475. So I hate to coach traders like this because I know my own personality. If I'm up $500 that fast in 30 seconds, I'm going to take the money every time. And professional traders around the world will say, Shane, you're going to lose over the long run. And I say, well, nobody ever went broke making a small profit. I'll take my money. For most of us, if you're going to be successful as a crossover trader, you've got to let them run, and you've got to take the wins with the losses. You've got to. And the reason why is you really need to make sure that you're hitting your risk versus rewards, because you are taking a risk and you're sort of ignoring everything else. Like this realistically should be down in here somewhere around 57.37. Do you really think we get that? 18 more points? Maybe, maybe not. I'm going to let it spin, and we'll see exactly where we're at the end of the session. But I don't like it. I would already be out. I would already be down at the restaurant eating a steak. And look, it would have cost me some money. We're still coming off. Not a bad trade. Mobile Dragon, good to see you, Mobile. Let's get back to that DXY, Calvin. Yeah, I mean, what we have here is a major situation on the DXY. The dollar index is where the game is. So something like this, you can see there's your big move. Now you're starting to retrace. So if I'm watching this on a 1-minute chart, you can see you've already got that real nice scalp off of 38%. 103.60 is the game. If we break above 103.60, then maybe we trickle up to 69. Maybe we trickle up here to where we were before the NFP number dropped. Coming off, though, absolutely fantastic stuff. Coming off. How's our gold trade doing? Well, I mean, it's pretty good. You're up about $1,000. 1 minute chart. Where do you want, really, where do you want to go? Where do you want to get out of this trade? That's the question. I recommend at least a 1-to-1. We've pretty much already hit that, 18-10. So we'd be looking for what, a 26? We've already locked in a 1-to-1. In my view, I like 1-to-ones. People tell me all day long on the internet that it won't work, and I say, sure it will. You just got to give it time. Something like that. Maybe that's a 1-to-2, something like that. Do you think you get 29-34s today? I think it's a real risk. I think it's a gamble. So we're already in positive territory here. I'm a sucker for taking money. I like taking money. So I'm going to go ahead and take that off. We missed our 1-to-1 exit, which would have been 26. We'll see how that pans out. And if you get the big runner up there and make the fortune and buy the boat and the car and the house and all that stuff, our E-mini S&P 500 trade, this thing's panning out beautifully. There's our shot at the market structure right there. I'm a big fan of taking money, so we're going to go ahead and we're going to take that as a profit as well. So those are decent trades. The 15-second chart, I mean, you guys are – there's some of you out there that'll do it. I'm not interested in that even a little bit. And you can see our yens falling out of bed. I would have loved to have got, if we could have got that entry right there off that off of maybe a hot NFP number, we could have killed it. We could have killed it, and we just didn't quite get it. So I would scratch these orders from the book and really say, we're probably not going to get any chance at all to trade the yen today unless we want to do something like this, which I'm a big fan of 4-hour charts. It's just not really going to help you here with the yen. It's just a doji essentially, or an inverted hammer. You can do all sorts of things, guys, but you can see that chart right there. Let's go to our 1 minute, and I'll show you just how close of a miss it was. That's unfortunate right there. Your high is 147.97, and we're looking to sell up there right around 29s. If we broke above 148, we could have got that. It was possible. Maybe we still get it. I would be sitting up there with sells probably the rest of the day, but you're not going to get it more than likely. So I'm sort of got to move on. We got to move on and find something else to do. All right. How's the Euro USD doing on our coded charts? You can see right there. We're still in. That was a loser. Thank goodness we didn't take that. I recommend letting these things set for a few minutes before trading it. Where are we at right now? Nowhere. There's nothing happening. We're flat. We're sort of moving sideways on a 1 minute. Let's back off a little bit. Let's go to a 5-minute chart. Okay, 5 minute. Now we've got an opportunity to trade. Now, the 1 minute and the 5 minute, if you want to trade right after an NFP, I would personally lean on a 5 minute just because we have a chance to get a market correction after a few 15, 20, 25 minutes where the market digests the NFP number. Then we have an opportunity. Right now, you were in overbought territory up there at 71.89 on your RSI. You're going to be looking to sell this thing with the crossover with the red. You're going to be looking to get red and get short when the red crosses the blue. So when the 9 crosses under the 20, you're going to look to get short. Can we do it? Yeah, we can do it. This can happen today. When would I like it? I would like it before the London-New York overlap's done. So I would say in the next, what is that, 2.5 hours, 2 hours? That's when I would like it. Fibonacci-wise, you're beneath 38%. We got a real opportunity to take that sell. This will be one that I'm watching closely. And if you're using the coded matrix that we put out on that video, you're going to be looking for that purple bar there on the cross under. Should be interesting. I'm not above taking that trade at all. I think that real tight stop losses depends on where this bar ends up, but it could be a good one. Could be a good one. I'll watch that later today. Let me see, Calvin. Good to see you, Calvin. NASDAQ to offer 24-hour trading on its stock exchange. Yeah, I mean, the big thing right now is just getting interest in the NASDAQ. Believe it or not, the volumes of this E-mini NASDAQ futures contract are a lot bigger than they were a few years ago. People want to trade all night long. Here in the United States, they want to trade all day and all night. I don't know, guys. We'll see. I don't trade index futures overnight. I've tried it in the past. It's impossible for me. At least what I like to do. I like support and resistance zones that mean something. And typically overnight, you just don't have enough volume to get the job done. That's just the way. But that may change. That could change. This is interesting. Okay, so if I'm looking at the NASDAQ right here, and I'm saying, okay, how am I going to trade this all day long? We're going to let it set up for the next 15 minutes, and you'll have a 30-minute bar. But those two levels, if you're day trading and scalping, those two levels that surround that NFP, those are ones to watch. Now, this is sort of a concept that I've been over and over and over again, but I want everybody to understand that this is why I get this question a lot. So should I be long or short going into NFP? And I go, neither. And this is why. I mean, look at this candle. Look at your overnight range in this, okay? You're trading through here, everybody's happy. And then what happens? A literal bomb hits the market, it goes off. What does this spike really do? Think about what this spike really does. What does it do? It knocks all the retail shorts out. Everybody that was short down in here got knocked out, okay? What does this tail do? The opposite. Everybody that was long got knocked out. The market has no direction, and this is why a lot of folks lose money. You can't trade like that. You got to wait for these things to develop and let them set up. If you wanted to try to make a little bit of money scalping inside of that 5-minute bar, okay. But if you're trying to take a daily position, boy, I would let the dust settle here, and I would come back for the U.S. Open. Should be an interesting day. See, look, we went positive on the dovish dollar, and now we're going negative in equities because there's too many market drivers. There's too much going on. There's tariffs, there's wars, there's all sorts of stuff. Very, very delicate right now. Very delicate. All right, let's talk NFP. Let's go over these numbers and see exactly what the heck happened. All right, here's the employment situation, February 2025, brought to you by the U.S. Bureau of Labor Statistics. All right. Total non-farm payroll employment rose by 151,000 in February, and the unemployment rate changed little at 4.1%. That's huge. All right, that's huge. Unemployment went from 4% to 4.1%. We were expecting 4%, 4.1%. What is that a reflection of? It'll be a reflection of the government layoffs that are really ongoing. In any case, federal government employment declined. We knew that was going to be a major, major talking point from the Bureau of Labor Statistics. That's going to be something we're monitoring all year long. All right, let's skip the rest of it because none of it really is. I mean, you can get into the numbers here and break it all down if you want. This is what I always like to do. I like to go down to the bottom and take a look at the last paragraph. The devil's always in the details. The change in total non-farm payroll employment for December was revised up by 16,000. Talked about that. They went back. They've revised December up twice now. December was revised up by 16,000 from 307 to 323. And the change for January was revised down by 18,000 from 143 to 125. With these revisions, employment in December and January combined is 2,000 lower than previously reported. Now listen, I don't care, and I want to be very clear about this. I genuinely do not care if you're a Republican or a Democrat. I don't care if you're a liberal or conservative. I don't care if you like Trump or hate Trump. I don't care. But this right here is setting the table for what's going to be a string of really dismal employment numbers coming our way. I said back in January, I believe it's going to begin in March. This one missed expectations. They're going to go back and revise it down next month. The next release in April, that's going to be a big one. And we may, in fact, have probably one of our worst NFP numbers in a long time. What do you think that's going to do to the markets and market sentiment? It's going to really shift it. You're going to start talking about recession, things like that. When you revise up the end of last year, we watched it the last two meetings. They revised December way up. They revised November way up. They revised it up. When you do that, you're basically saying, look how strong the jobs market was towards the end of the Biden administration. And you're going to be able to make the case that, the job situation's terrible under Trump. You're going to see that. That is going to happen as sure as I'm sitting here. And now, listen, the media, a lot of media outlets lean one way. A lot of media outlets lean the other way. Use your head when you're trading these numbers. Use your head when you're evaluating them. Understand, and I was saying this last year, understand that they mean very little. What we're going to be focused on moving forward is economic growth. And also this jobs number, I'm going to give it until June to turn around. I would say you're going to get a string of bad numbers until June, and then you need to start seeing good positive numbers July, August, September. If we don't get that, then there's a good chance that the markets are going to correct in a big, big way. That's my own personal opinion and sidebar, but I'm pretty sure it's right. I'm sure it's right. That's how this is going to go. And if it does go that way, we're going to trade it and we're going to make a stack. That's just the way it is. All right, guys, just sort of looking around the markets. If there's any that you'd like to see, just drop it in the live chat. If not, I'll go ahead and sign off. We did have a trade idea out yesterday. Let's go ahead and take a look. Maybe we got a little bit of love here. This Kiwi, I don't know what the heck that is. That out of there. We had an actual sell signal on the Kiwi setting up. Yeah, and we're in a pretty good position to get it. So I would definitely have the Kiwi on my radar for next week. 58, 45, somewhere in there. We'll be looking to sell. Check out your trade ideas for your key levels and on that, how to cash in right there. All right, everybody, I'm going to go ahead and sign off for now. It's been a good NFP. If there's anything else, you guys cruise by the trading room. Mobile Dragon, Euro USD. Okay, I'll go ahead. I forget I'm on a delay sometimes. Okay, Euro USD, let's go ahead and take a look at it. I'll give you a good look at what I think of it. We had really a hot level that came into play the other day. Yeah, absolutely mobile. Right there, 62% was 108.17, and I was sort of saying, hey, listen, this is a big deal. This is a huge level, and it was a huge level. You can see right there we had some just beautiful scalping right off of that monthly 62% bang. We even traded up a little bit, and then we had a nice move right there. That was the one that was a pretty good one. And then we came up and take a good look at this. Now, remember this about horizontal support and resistance zones. Once they get hit a lot, the price points become saturated and the market really doesn't see it as anything anymore. And once they break, they break. That one broke. We're heading much higher. Right there is going to be your NFP 30-minute bar. All right, let's go back. Let's back it off to our, well, I mean, before we move on, I've always been a big believer of what once was resistance is support and what once was support's resistance. You can see this compression right here. This was beautiful. Scalp into the long off of this zone. So, I mean, if I was looking at it, I'd say, okay, 108.17, that's a pretty good demand zone right now. There's a lot of action down there. So if we went to a 4-hour chart, you can see, I mean, the trend is very evident on a 4-hour Euro USD. I mean, this is a bullish pennant, 4-hour bullish pennant. There's your move. There's your flagpole. And then right here, bullish flag, bullish pennant, whatever you want to call it. That's your pennant. That's your run. That's your rotate. There's your compression. So if I was looking to build a trade, I'd say, okay, we've broken above resistance. I have a bullish bias right now. That NFP number was not good. The markets they don't know what to do with it right now. Nobody really knows what to do with anything. I would say this. You got pretty good support right there, 108.17. Let's look for a little convergence. And this is sort of a concept that I've put away over the years because it can get really difficult. And I was getting questions, all the different nuances and things that come up when you start talking multiple time frame converging indicators. But something like that, 117 to 112, that's pretty good. That's pretty good. Absolutely, Dave, you're welcome. So I would be looking to bid right down in that zone, probably looking for 25 pips or so. You get it. Should get it. As far as a macro perspective on the Euro USD, I would be looking at my monthlies again. 78% is always a huge number for me. 109.92. Yes, please. I'm selling up there all day long. Probably beginning at 109.75s. That's a pretty good level. Why? Key level, 110. You've also got long-term order blocks right in here. That trade right there makes itself. It's just a question of if you get it or not. All right, everybody, I'm going to go ahead and sign off here. Yeah, I just covered the Kiwi. Go back and look. I just covered the New Zealand dollar. We got a trade idea out for the New Zealand dollar. Be sure to check that out when you do get a chance inside of the trading room. All right, everybody, that's enough from me. NFP was fantastic. Just get ready. We know what's coming. Just get ready. We'll trade it accordingly. Be very careful. If you made a stack of money going into the U.S. Open, be sure that you take some of it with you. Don't get chopped up by these markets, especially the equities indices. They have no direction right now. We're slightly positive. We'll be negative. We'll be positive. We'll be negative before you finally get a little bit of a late-day break, midday break, if you get one at all. All right, everybody. Have a fantastic session. Good to see everybody back in the room. Check out the stream schedule. It's a little bit different these days, but check it out, and we'll have some streams scheduled in here in the next hour or two. And we'll also have a trade idea out once the dust settles here a little bit on NFP. All right, that's a wrap for this week. I want to thank everybody for joining me. Have a fantastic weekend, and we'll see you back here Monday.